But again, where is this money coming from? International investors are not nearly as interested in buying Chinese government bonds as they are in US government bonds, and that's because, even despite the risk of China's money markets, they are again paying far less than the comparatively risk-free US bonds. The actual answer to where this money is coming from is, it's been made up. We all like the money printer memes, but between 2000 and the end of 2019, the M2 money supply in the USA roughly tripled. Of course, things got a little bit spicy after COVID, and economists slightly redefined this metric, hence the big spike. But even still, in China by comparison, the money supply sextupled, which probably doesn't mean anything to most of you watching, but it means that it multiplied 16 times over. I just thought the word sounded fun to say. Anyway, that means the money supply in China has grown 4 times faster than the money supply in the USA. That's because when China wants to borrow, it just gets one of its state-owned banks to bippy-boppity boop some cash into existence and loan it to whatever level of government or state-owned enterprise needs it. Now again, the USA and most other advanced economies do this as well, but not to the same extent. Why can't governments just print more money to pay for everything? Of course, the usual answer to this would be that it would cause rampant inflation. Normally, creating that much money that quickly would cause prices to rise because there is more money chasing for your goods. But that hasn't happened in China, at least not yet. The country has been able to get away with such an extreme level of money creation because consumer prices have stayed very low, despite all of this extra money floating around, because Chinese consumers are still incredibly frugal. This low level of inflation also means that banks are happy to lend at the lower rates in the country because even smaller returns would end up being the same after taking inflation into account.